Let's kick off the session. So welcome everyone. Great to see you all. And today we talk about a topic I think that's close to my heart and also to Stefan's heart for sure. That's around like pivoting faster and better. Like majority of the startups at some point will very likely have to pivot. And that's a topic we'd like to cover today to make sure like what are the implications for founders, but also for investors, because it is a huge change and could trigger a lot of other things that would follow. But before we deep dive into all these details, what pivoting really means, I first of all would like to bring up just like 4 slides to present to everyone what is actually SICTIC as an organization, because we have a good amount of people here as well who joined who are not familiar with SICTIC. And I just quickly go through it, and then Stefan will continue with the main part of the event. So we are organizing this event at a couple of other webinars on different topics as an organization that's called SICTIC. And we are like the biggest angel investment club in Switzerland. And we are like a community that connects startups with investors. And in Switzerland, a lot of innovation is happening. A lot of great startups are founded every day. And we have a community of 400 investors who would like to invest in those great startups. And we're doing the matchmaking here and making sure that those who are deserve funding get the funding and don't have to waste a lot of time and can focus on customers, users, and growing the business. We are a nonprofit, so we're giving everyone who's part of our community access to all the startup details in one of our platforms, where you can slice and dice the data and see what are the most interesting startups in Switzerland that look for funding. We do this across all verticals, in pre-seed and in seed stage, and we do this virtually and also in events. So last year, we've seen more than 750 VC investable startups in Switzerland across different regions in Switzerland and verticals that looked for funding and could support more than 120 with our community. So quite a good amount of activity that's happening in the market by our great angel community. And whenever you're a startup, you look for funding, I'd encourage you to apply on our platform, just sictic.ch. And if you want to be an investor, just join us as well. Details are all on our website. We're doing a lot of events. That's one of the events we're doing today in an online format, but we also do a lot of events physically. So after the summer break, we will continue with a lot of events in the Zurich area, but also in the Romandie, and also make sure that the educational part is well covered, because angel investing is a topic that can be quite complex when you start, and we like to make sure everyone feels comfortable. And today's session is one of the areas that is something that many investors might not be that familiar with. And once you put money into a startup and you see it's pivoting, it might have some implications for you as an investor. But I'm stopping here. In case you have any questions to SICTIC as an organization, to the Swiss startup ecosystem, you're a founder, you're an investor, please reach out. I'm happy to share with you more details. And now let's move over to the reason why you're here today. And the reason why you're here today is Stefan. And Stefan Zanetti is someone we stumbled upon not so long ago, and we thought that's someone we really need to present to our community, because he is a serial entrepreneur. He founded 5 different businesses and knows what pivoting means really, really well, and is now running Pivotal, which is really focusing on just pivoting the majority of his time. And we asked him if he could share his wisdom and learnings, what he's seen on the way, because as I was saying, it can have huge implications on what it means for a business. What I would like to encourage everyone here who is in the call, whenever you have questions, just drop them in the Q&A section, which is at the bottom of the Zoom meeting, so we can pick up those questions and make it a bit more interactive. There will be a couple of different sections where we have a pause after each section if you have any questions to the sections specifically, but also generally feel free to drop in questions. So we'd like to make sure you get the questions you have answered from the expert in this field. And with that, I'm handing over now to Stefan. The floor is yours. We're very much looking forward to your presentation.
Yeah, many thanks, Stefan, for the introduction, and welcome everybody from my side. Happy to have you all here around this topic of pivots. And Stefan already said I have acquired some experience in pivoting. I funded 5 tech ventures in the last 25 years. 3 of them were ETH Zurich spin-offs, and the pattern was always pretty much the same. So they started like that for the first few years, and then suddenly growth went flat. We almost hit the wall, and then we had to pivot. And these were always very hard times for us. And we did a lot of trial and error. I think in hindsight, we struggled more than necessary. So when I stepped down to the role of the board president of my last company, which is called All Things, and where I'm still active as a board president, I said, what do I do with the rest of my time? And I thought it has to work better. The pivoting thing has to work better. And I was doing some research about how can we pivot faster and better. And what I came up with was a complete pivot playbook. But I never published that book because people told me it's all good and right, but let's just better proof if this works, this playbook. So it happened that during the last 1.5 years, I accompanied 32 companies in the meantime in pivotal phases, and of course gained even more insights on what it is all about when we talk about pivots. And I'll walk you through some topics here, but before starting, I would like to ask you a question. And the question is, who of you either knows this guy on the right side here or a company that was called Glitch? So just send a thumbs up if you know of these guys. You all see my screen, don't you, Stefan?
Yes, we see a screen.
Okay, good. Who knows the guys on the left side or the Glitch case?
Feel free to put it in the chat.
Okay, yeah, that's also good, yeah. Or raise the hand or whatever. I do not see many reactions, which is not so much surprising because I'm totally sure everybody knows the company in the meantime, which used to be Glitch. Glitch was an online game at the time, and has raised 17 million to the date where the CEO suddenly realized, okay, we have 2 big hurdles. First of all, it was built on Flash, this technology that dominated the market around 2010, but where Steve Jobs decided that he's going to kill it. So suddenly the technical basis was eroding, and secondly, he found out people play the game in 2 days, and then afterwards, I mean, where do you earn money? Huh? So that's not so much of a recurring business model. And they still had 6 million left in the bank account, and the CEO, who was called Stuart Butterfield, went back to his main investor, which was Andreessen Horowitz. So this is Ben Horowitz on the left side, and said, "Hey, we've got a problem. It's not going to work." So there's 2 choices: either I'll pay you back the 6 million, or maybe we have an idea what we could do completely differently, because we have developed an internal communications tool. Which was a communications tool enabling better communication amongst developers, a totally different game. It was more in the B2B market. And Horowitz said, I mean, okay, I know you've built up other successful startups, and secondly, it's very difficult for us to get back the money once we have spent it. So give it a try. I mean, if you believe this is worth going forward, then do it. That company was later become known under the name of Slack. And only 9 years later, they have been acquired by Salesforce for $27 billion, which made Andreessen Horowitz like a 3 billion win on these 17 billion that they have invested. Why do I tell you the story? I want to change the perspective a little bit from on this pivot topic. Oftentimes when we talk about pivots, it's like, okay, we are in a crisis, and yes, of course, it's hard and tough and so on. But I see it as an opportunity. I think this is the right framing. So the unfair advantage startup companies have is that they really can change their business model. They really can change direction, and not everybody is crying. You're not going to be in the press, etc., etc. And it's very common that this happens. We will see that. So if currently you are in a pivot phase, take it as an opportunity and less so as a threat. And of course, limit the threat dimension. Now, I want to walk you through 6 chapters here, some basics about pivoting, some data stuff and research findings, something about pivot patterns, typical patterns that we see in the market, and then how to go on if you run into a pivotal phase. And I also want to dig into a case study with you and then close the session with the key takeaways. And I will propose that after every chapter, we open a question and answers round. Stefan, if you can moderate that and ask the people if they have something to share here. But let's start here. Where does this term pivot come from? It's not really a common term in the German-speaking environment, but for the Romand amongst us, they may know it because originally, indeed, it's also a French word. Pivoter means to turn, to rotate, to switch around. And in English, they also have an adjective on that, which is called pivotal, a very nice word, I think, describing something crucial to the development of something else. So it's what we see is it's always about really turning something, and it's about major changes. So we're not talking about the small feature change. We are talking about major changes in a company. And those who are sports people, maybe basketballers or boxing people, they may know like the pivot step. In basketball, you see it here, like that's when you really change the direction. And as you know, in basketball, you cannot run like with the ball for several steps. So you always have to stay at least with one foot on the floor. And that's also a good like analogy. So we're not talking about like dropping everything overboard, because you need to stay grounded in most of the cases. Slack was a little bit a different case, but you also need to know what you have. In the tech environment, Eric Ries was the first one who came up with this term pivot. And I can guarantee you, if you speak to somebody who is not deep in the tech environment, nobody will understand what you talk about. So they talk then about restructuring, repositioning, and that kind of stuff. But pivoting is really like, that's our term in a tech environment. A pivot, there's lots of discussions and definitions on what a pivot is, but to make it short, in my view, it involves 2 main criteria. First of all, it's like a real strategic decision after or in view of a potential failure of the business model. And I can only not stress it enough. I mean, it's not about like tweaking a little bit pricing model or delivering another feature. That may, of course, be part of this, but we're really talking here like on the level of a business model, a fundamental change. And a fundamental change means something in your business model really changes fundamentally, either the value proposition or how Alex Osterwalder is calling it, like the front stage. So everything around like customer segments, channels, and the way how you communicate, position yourself, or the backstage, how you produce your stuff, or how you do your pricing models and the profit generation in a company. So these are like the criteria on when we talk about pivots, what we talk about when we talk about pivots. And there is also like different types of pivots. If you look at what Eric Ries has described in his groundbreaking book in 2011, he was mainly talking about early stage pivots. So early stage pivots means like essentially before a seed phase. So it's like an idea searching for its market. And then you try this and have this MVP stuff. You switch every 2 weeks, what it could be. And later stage pivots is more what I'm talking here about. I think many of you have also experienced, yeah, you started a business, it grew maybe like 2-3 years, you thought there is a product market fit, and suddenly it's not working anymore. So companies that have acquired 10, 50, 200 customers in the B2B area or a few thousand in the B2C area worked, and suddenly it stops to work. So that's what I subsumize on the later stage pivots. And then there is also a difference between like opportunity driven pivots and survival pivots. So the survival pivots are obviously more the ones where you see, okay, it doesn't work anymore the way it worked. Opportunity driven pivots, there's a nice example from Bern. Maybe somebody knows the company called Ender. It's written Ender, like the German word, and they did like diagnostics devices and procedures for horses. But when COVID came up, they realized, okay, better maybe switch the horses to people, because they had essentially the whole technology to do the COVID testing, and that was an opportunity, obviously. For many people it was a hard time, COVID, but for them it was like an opportunity. And then we see pure pattern pivots and combined pivots. So one classical model that, for example, Eric Ries came up is like zoom in, so that you build a product broad like that, but you see it's only like one feature that is interesting for people. So you zoom in, pretty simple pattern. But there may be also like combined patterns. So I'm zoom in, but I'm also switching like the profit formula area, how I price it. And what we also see is sometimes pivots happen one time as a pivot, but there is also serial pivot stuff. Sometimes you just say, okay, we have to go into that direction. We cannot really sort out like what it means on the pricing side. We do that later on. But it's just like a little bit the conceptual and theoretical part here. Today, we're really talking about later stage and survival pivots mainly. I would say like typically companies that have raised some money already and that are kind of stuck somewhere. Hard data about from research and findings is like the next topic, but maybe just here a quick point. Is that so far clear to you what I talk? Is there any questions in the room?
So if you have any questions, please just add them to the Q&A section. Maybe the quick one in the meantime from my end, like what is like for you kind of a flag that comes up where you need to think about now it's the right time to think about the pivot? Is there a certain KPI you should look at it? Is there a certain, like, I don't know, percentage growth that is not growing anymore? Do you have like a recommendation here?
Well, I mean, for me, the number one criteria is if you wake up in the night and think, shit, I really don't know how this is going to work from here in 9 or 12 months. So that's really like, I think it's a very emotional KPI, but we all know these situations as entrepreneurs that can happen. And I think this is the signal you really have to be aware of. And yes, of course, I mean, we'll see it afterwards, what are typical triggers to pivots. Obviously, declining growth over several quarters is something that we have to take into account as a potential pivot indicator. If you have no more questions, I have a question, and maybe Julia, you just can like shoot in this quick questionnaire that we have built up here. I'd like to ask you, have you ever lived through a pivot in a tech venture, either as an investor or also if you're an entrepreneur, have you seen it on your own? And please just share like, no, never seen it, once, or several times, or even the majority of my investments or tech ventures that I found it had to pivot.
Let's give it a couple of seconds until the results are in. We have the answer, clearly several times.
Yeah, and not so much surprising. We'll see that when we look into the data. It's indeed, it's the majority of companies that have to pivot along the way. If we look into what we see typically in a VC portfolio, then what happens is like that VC, you know, the investment thesis of a VC, to make it very simple, is like I invest in 10 and I hope that one is really the fund returner. In reality, it's oftentimes only 4%, and 25%, 20, 30%, something like that are wrong bets. So it just didn't work out. But that leaves the big majority, so 2/3 of all VC investments ultimately in this space where, yeah, the business model is kind of a bit working, but stuck, don't get ahead, maybe also organizationally stuck, maybe from the ownership side stuck. So what we see here is, I mean, we always hear like these outstanding tech cases, unicorns, blah, blah, blah. But the reality for most of us entrepreneurs is that at least sometime in our journey, we really face a hard time and think, okay, it's going to be the end of the company. And if we look into like what research has found out, it's a little bit historical data in the sense of gathered during the last few years, but then we can say only 10% of successful startups really succeed with their original plan. And then 60% of Series A startups have pivoted from their original idea. So you see it's more the majority. So it's more like the common thing that happens. What is super interesting, I think, is what we can also prove is that startups that pivoted are more successful ultimately. They're also more successful in fundraising. So if you're an investor, I would look also into a potential past pivot as an indicator that they have already learned something. This team has learned something. And same goes like for follow-up rounds. So even companies that maybe raised the Series A, they are 50% more likely to attract the Series to get the Series B funding after a pivot. 75% of the founders, and it's also interesting, say, yeah, I was skeptical if I should do that, but then after they've done it, they said, okay, it was really sensible. And one thing I oftentimes see, and that's also backed by data, 55% of all founders say it would have been better to pivot faster, to pivot earlier on, because we all tend to try too long to stick to the old model because we got in love with the original idea. So that's some indications. It makes sense to pivot, makes sense to approach the topic offensively. Now I see there is some people who raised hands. Not sure, Stefan, if you say there are questions that we have to answer right now.
So I can give you one of the questions that just came in. Do you see a danger of pivot fashion as in startups feeling obliged to pivot in their road to success?
Oh, not sure if I really get the question. Maybe can you help me understand it a little bit better? Is it like the idea of, yeah, we just
So it's kind of expected that you will have to pivot and not just stick to what you believe in, because sometimes being a bit more stubborn can help you also to be successful.
Yeah, difficult question, of course. You know, I mean, you have to really look at the specific case, of course. But what I see is a really interesting and also dangerous pattern. I mean, many founders try to raise money and they tell the story to investors, and the investors sometimes say, yeah, but it's not good enough, so come back. They refine it and then they come and then they sign the contract with the investor, and then kind of everybody is locked in on this idea. You know, the investors expect, yeah, now you deliver the case that you have shaped, and the founders come into the position, oh, okay, I got to deliver, I got to stick to the idea because I have like this obligation towards the investors. And sometimes what I see, and that's also a very personal experience from my side, I mean, as a founder, it really makes, when you feel, I would say that's the honest answer, when you feel it's not going to work, then don't stick to the model that doesn't work. And ultimately, you may have whatever in your contracts with the investors. You know, you're always on the bigger power side as a founder, because you're the one who runs the business. And if you go back to investors and say, honestly, we found out it's not going to work like that, we have to do something else, my experience is investors are really open to listen to you, because what else should they do? I mean, of course, if you haven't screwed it up with whatever kind of totally strange stuff. Let's move forward. My perception is indeed that in the last 5 years, it's even getting more intense. And that's why I've said, okay, these are more historical data. And why is this? I mean, I think kind of the classical tech venture growth model is broken. It has always been, of course, like a bet on some only successful companies. But what we see is like the original ideas was, yeah, you have like an idea, you have friends and family investing into the idea, then you raise a seed round, you go to product market fit, you raise a Series A to scale internationally, build your product out, etc., etc. And then anytime you want to dominate the markets, yes, of course, the ones who dominate the markets are then ultimately less than 1% probably of those who have started here. But what I feel very much is like markets change much faster in the last 5 years for various reasons. User behavior also changes faster than it used to change earlier on. Geopolitics change, as we know, as we see every day. And also technology changes. I mean, if you look now at the AI wave, this is essentially threatening every SaaS business model, and asking the question, where do you go with your software startup if technology starts to do a lot of what you have programmed as a support process? So these are all indicators where I say we will see much more pivots in the future. Moving forward, maybe to also an interesting study, people asked here more than 100 startups, what were the reasons to pivot? And if we only look at like the 6 main reasons, which like cover around 2/3 of the reasons, then we see the negative customer reaction. So you asked for a minute ago, Stefan, what are like indicators? I mean, of course, if you hear over and over again of your customers or half of your customers, it's not working good enough, it's not like hitting the point, etc. And you see this like a quarter of the reasons why people pivot their startups. But other important reasons are also technology challenge. So you just don't get it baked, essentially. It's too complicated. You're not able to compete with your competitor. I see that in many Swiss startups, we focus on the Swiss market and suddenly we see, okay, the German market like 8 times or 10 times bigger, the US market 50 times bigger, and you suddenly have a competitor who just can run into your space with much lower prices. Unscalable business, that may turn out only after a certain time. Or bigger customer need identified. This is the zoom out pattern. So I was focused on this and I see, okay, I gotta cover more of the customer's requirements. And flawed business model is very simple. I mean, I can't make money on that. It's like a good idea, but nobody is paying for that. So these are some of the main reasons here, what we see. Yeah, maybe this is a little bit the data section. Do we have any more questions?
Yes, we definitely have questions. And I'll start with the first one from Zareen. Would it be logical to pivot to something that is not a completely alignment with the core business? So many companies pivot to AI due to the hype, or investing in Bitcoin or other crypto to benefit from the price rise, such as MicroStrategy firm.
Yeah. Yeah, again, I mean, of course, you always have to look at the very specific situation of a company. But what we have seen, for example, in the Slack case, which is probably one of the most extreme pivots, because this was essentially a side project pivot. So they just switched everything and went on a small side project that they had internally. It turned out to be very successful. Therefore, yes, that can make sense. But I'll return afterwards to how do you do that? I mean, you don't want to be like totally naive and say, okay, what we've done doesn't work. Now we do something completely different, and you have not the least proof that this could work out then later on. And there are good concepts on how you can like get more insights on if something is going to work or not. Is there another question?
Oh, we have a few more. From Zach, what are key indicators, both intrinsic to the business and in objective realities, the outside world, that a pivot may be prudent now? Is there a certain set of experiments a company should run prior to pivoting if operating with limited real-world data for the current business model? Where's the crux to say, do it?
Yeah. Yeah, I come back to that later on this, how do you manage this uncertainty? But I mean, for the moment, we're more focusing right now on what are the triggers. So if you come to the point where you see, okay, it doesn't work, so that's where we are right now. Now we are moving forward later on in the webinar into what do you do then and how do you do that. So maybe if I can postpone that a little bit.
Yeah. Just one more question, maybe. In tech, you have KPIs like growth to lead you to pivots, but in biotech, the tempo is different. So should pivoting be an early de-risking plan?
Yeah, that's a good question, and very honestly, I have to say I cannot really answer that. I have to say the pivot concepts very much comes of the from the tech space, and I'm currently really looking also into how far can you, for example, apply that in pharma research area, where we know the dynamics are totally different. So you're gonna get like $10 billion to pump a medicament out over a time span of 10, 15 years. So I honestly have to say I cannot answer that question here. Yeah.
Let's maybe move on and
Exactly. So when we go back again, like to 2011, this is just like a little bit the history session. So, but it's good. What Eric Ries has already identified is that he had 10 patterns. So he said, okay, we have this zoom in pattern, which we have already seen. We have then the contrary is like the zoom out. So as I said, I mean, so small today, but we gotta cover a bigger customer need. Then you have the customer segment pivot, which is a classical pattern. You see, okay, I've got a good solution, but it's just not working in this segment. So that's, for example, the NDR case. The customer segment is no more horses; it's people now. Or a customer need pivot. You see, okay, I thought this is really the problem that is important, but then you see it's another problem. But you've built up the customer basis and you move into that other area. Platform pivots, at that time, it was really new. But what we see is like that some pivot patterns are really like shifting from a product approach into a platform approach. Business architecture pivot is, okay, I was, for example, in a high margin, low volume business, but I have to turn that into more standardized, low margin, high volume business. Value capture pivot, that relates then to the way of how you monetize your business. And that, for example, one of the very often seen patterns is we are in a transactional business, but we want to turn that into a service business where we have not selling the product, like is essentially the Nespresso case, where you more go into not selling like the coffee machine, but really like the almost a subscription type of revenue model. And then the engine of growth pivot, of course, that we also see is like what kind of growth model do you have behind? Is it a viral one? Is it a sticky one? Is it on paid engine and channel pivot? So these were, the last one is the technology pivot. Okay, we find out the underlying technology, like for example, flash is going out of the market, so we have to change the technology. That is what Eric Ries said in about 10 years ago. But in the meantime, we see there are more patterns, and what was very helpful is looking into what Alex Osterwalder and the guys from Lausanne and Geneva have done with a business model canvas, because they essentially have done a lot of work in like how to analyze a business model and how to switch from one business model to another one. Only they always were like on large corporates, so they were talking about Fuji, Tesla, etc., etc. And I thought we have to break that down on tech ventures, really make it narrow. And what I found then is ultimately we can very well sort out different pivot patterns in these 4 building blocks here. Ultimately, I identified 49 patterns by analyzing like more than 500 successful tech venture pivots. And here they are. I mean, this is too much, of course, to understand it, but just to give you an idea, there is lots of things that you can do if you run into a pivot situation. The question is, of course, which one is the right to do? And I'll touch that later. I've written a white paper about that. Here is the link. You can go on that link. Maybe Julia, you can share this link in the chat, and also there is a small code, so then you get it totally for free. that's only valid today. So maybe if you want to do that, have a look at what Julia is dropping into the chat. Going forward here in our storyline, we've now covered the pivot pattern topic. So what we can say is there are generic patterns which you can really apply in a very specific situation. Now, how do you find out which one is the one that matters for you? That's the next thing we're looking into. Stefan, maybe a question. Did we acquire some more questions here in the meantime, or?
So there's things we can ask. So are there now more crucial triggers for pivots than there used to be in the past? Like with all the changes that happened with AI, with like geopolitical changes, or do you think the general framework that you presented from 2017 still applies?
Yeah, it's a valid question. I didn't find indeed really more accurate data, but my feeling tells me that's plus minus the same still. And ultimately, again, I mean, for you as a very specific, in your very specific situation, doesn't really matter what the reasons for others are. I would like to walk you a little bit into what do you do now if you feel like you run into a pivot situation. And maybe the first thing is over the time I found out there are some principles that really make sense to follow. And the first one is, I mean, you really have to judge fast. Is there any chance at all to save the company? You know, that sounds very hard, but sometimes it's really better to say it doesn't make sense. I'll give you some indicators. So if like your runway is only like another 3 months and you're stuck and it's not going forward and you don't find any investors, or your existing, you won't find any investors at all, of course, but your existing investors are not able to bridge it, then really the question is, I mean, do you still have the capacity to pivot? Sounds very hard, but sometimes it's also better just to say, okay, that this bet didn't turn out, and let's close it properly and go forward. Second one, and that's a little bit related, don't run out of money. I mean, that's a very hard, of course, advice, but I had to do that 3 times in my career. So we like released 30% of the employees. That's the hardest thing you can do or have to do as an entrepreneur. But it's really important. I mean, you need time, you need money if you are in a pivot situation. So you really try to get profitable or break even, at least, just to have as much runway leeway as you can cut out. And then it's really important for us as entrepreneurs to acknowledge that we all tend to fall in love with our original idea. I mean, I'm a good example, you know. I mean, I really stick for a very long time on my original ideas, and we had the indicators not really like working, and that's very natural because I mean, you work like 5, 6, 7 years, 80 hours. And then suddenly somebody comes and says, oh, okay, it's not working. So the natural reaction is no, we try harder. And that's dangerous. So I came up with a process and some tools that can help to eliminate these blind spots, because other people see other things in your companies than what you see. And the fourth one is, and also goes a little bit into the same direction. In a pivot situation, typically, you know, you could say the people who have run the company into that situation, they are the ones who have been responsible for that result. So they didn't see what is changing around. And it's not like to say, okay, you're guilty or whatever. It's like if you come into a pivot situation, oftentimes it makes a lot of sense to include some people who are a little bit further away, know your market, but are not really like insiders, because they may develop another view on where it can go from here. Fifth point, you have to be data driven, and that comes back to one of the questions we had. I mean, where do we go from here? So if you don't know where to go, the first answer is you start to generate data on hypotheses where to go. And you could say in some way you come back to the initial, like what Eric Ries said, MVP type of how can I validate the validity of like a specific pivot path I have in my mind without burning a lot of money. And that you can do by generating data. I'll show you, like, for example, in a minute on how you could do that. And then also an important thing is, and that I also know from myself, I mean, somehow what the company you build is like a mirror of what you are yourself, you know? It just mirrors like your strengths and your, also your weaknesses. And running into a pivot oftentimes means that something has to change in the company, but it may also mean that something has to change on your side. Maybe also the role has to change on your side. We see in many pivot situations that maybe original founders then switch to board president, or they're evangelist afterwards, because just a different set of capabilities is important. And just don't take that as a failure. It's a very normal process. And I also see quite some entrepreneurs who fear that first, but then they say, luckily, luckily I could get rid of the CEO job or whatsoever. And the last thing is start as early as you can, or better make it like a permanent process. I think today we always have to be aware that we can run into a situation where within 3 or 6 months, the complete market environment is totally changing. Now, digging a little bit into some details, what I do today is like, I start, if companies come to me in a pivot situation, say, okay, it's like in medicine, this is an emergency situation. So you go into the emergency room. And what do people do? What do doctors do in an emergency room? They try to assess as fast as possible what's really going on, because you don't know it from outside. And I do that in workshops, and I'll show you how I do that, just to generate the data about your situation. And then what is important, I mean, like in a hospital, typically you don't go into the emergency room, and if it's really a severe topic, and then you walk out and everything is good. So then you have like a recovery phase, you're maybe like in therapy, etc., etc. To give you an idea, the average time of completing a pivot is like 2 years. So don't expect like you decide tomorrow to pivot and by the end of the week it's done. It takes time, and you will test out over the time. And that also relates back a little bit to my advice: make sure you've got the money. So if you have to survive for 2 years, typically you know what it means. I mean, it's like nobody is going to finance typically a company in a pivot stage. So you're in this phase, and then chances are good that it's going to lift off again. Now, I would like to dig into principle 4 and principle 5 on how to generate data and how to enlarge your team. What I typically do is that I say, let's start with an assessment, which is nothing else than essentially a SWOT analysis. So strengths, weaknesses, opportunities, and threats. But I'm not talking only to the founder, but I say, let's combine a group of course, founder, management team, somebody from the board who has real market insights, and maybe some outsiders, a market insider, somebody, your first customer, the customer that became a friend of yours, or some high potentials in the company that may just come from like another company who had a different view on the market. And what we run through is like a questionnaire of 60 questions in these 9 building blocks of the business model. And guess what? I mean, for me, one of the most surprising things was, I mean, I just ask always people, I mean, how do you rate yourself, for example, in the dimension clarity of your target customer segment from -3 to +3? And we generate that data, which is, of course, like not hard sales data, but perception data. And guess what? I mean, what we see is that typically it comes out there is not so much alignment on the view, in the sense of everybody sees it the same way. And that's also not bad, because that may indicate that some people see a chance in one area which you don't see anymore. And what I've experienced is this is a very fast process in the end. I mean, that generates so much clarity, and also kind of so much, it's such a democratic process, it's not like a power play process. And it has a lot of acceptance just to walk through such a pivot situation with such a pattern. I experienced, I mean, I've been in a board, 2 VCs on the board seats. The best strategic advice they could give is we have to sell the company. We have to sell the company, it's not a strategic advice. Foremost, you cannot sell a company typically in a pivot situation unless you want to do a fire sale. And yes, of course, in their logic, it's oftentimes like, okay, I do a little bit of recovery. Maybe I get like $1 million back of 6 million that I invested, but it's not a strategy. And what helped us in such situations is that we came back and said, no, I mean, we have some ideas. We generated these ideas really like from bottom up. And that's really important. And in the 33 processes I accompanied in the last 1.5 years, that always turned out to be very insightful. Either it is like just a confirmation of what you've been thinking anyway, and then you like small adjustments, or you see, hey, I had a total blind spot. I had one company who really like, they totally changed the pricing model because it was like pricing to the customer, but then they found out better I price to the partners in the future. So I totally flipped like the pricing model into an asymmetric case essentially. That's a little bit how I work, and I'm digging into one case study to show you how that looks in reality. So that was a company, I call it ACME1. ACME stands for a company that manufactures everything. You may know that from like there was like one comic strip that used that 20 years ago. And that it happened exactly that. So we collected the data. And now what I did is, I mean, I matched this SWOT profile behind. I built a small AI agent. Of course, I have to do that too. He's called Pippo, this weirdo here. And what he does is like he matches really like your SWOT profile towards the patterns of these 500 companies that have been in similar situation. And essentially, as companies in a similar situation like you have done this and that to move out. And then he jots out like these patterns, these paths that you could follow. And we come back to the question of how do you manage these different ideas? So if you see this process here, it's kind of systematic in the sense of, okay, we analyze together, then we match it to patterns that work in the market. And then this guy here comes up with recommendations. And he also does like a first recommendation in where is it about to exploit, or where is it about to experiment and explore. And I'll dig into that, what it means in detail. And of course, he's never that intelligent as you are because he doesn't know the details of your market. But this is like the companion that sits at the table and that delivers some input into your specific situation. And ultimately, it's all about like speeding up the discussion amongst you, make it more valid, and getting more clarity on how to go on. And I'll dig into that exploit, experiment, explore framework, which I oftentimes call like the E3 framework. So again, I mean, here we have this company that is manufacturing everything. And I'm not saying you're not focused, of course, but I know it from my own experience. So you have tons of stuff working at the same time and 20 ideas what you could do now. And what we see is like this pattern to say, okay, let's exploit the core that is still working, because typically you have something that is still working in such a later stage pivot phase. And exploit means like we try to get the maximum on the pricing side, and we reduce the costs in the core business. That is what exploit means. And then let's define like 1 or 2 or 3 experiments. And what is an experiment? An experiment is something where you say, okay, I have some first proof that it could go into this or that direction. What could be a proof? I mean, you see a pattern, for example, in inbounds. Suddenly people knock on your door coming from a totally different business customer segment. And then like 20% of your inbound suddenly is no more your ICP, no more your like ideal customer profile. So that is a very good indicator to say, okay, maybe we just should switch like the customer segment, and then you set up an experiment. Or whatever. I mean, it could be like I was in a recent discussion with a company that said, okay, you deliver candidates, and that was like in a recruiting market, but I would also like to know like how qualified are these candidates. So not only quantity, more quality. And then if you get that feedback of the customers, and then you think about, can I do something in that space? Explore. These are ideas that theoretically make sense, but you have no proof. For example, you could say, okay, typically a company coming from that and that position could end up with this business model, but I have no idea if this really works. So what you do there is you just go with a very limited amount of time. You do interviews, you go to potential customers, you put up a landing page. So you're back in the Eric Ries early stage MVP type of stuff. This is what I would classify explore. So all what I'm saying here is like, if you do it systematically, you're going to be faster, and you're probably going to have a better quality in your discussions and a more broad aligned discussion in your company to move forward. There is no like, you know, like the pill that changes everything overnight. That's not my message here, but you can walk through these situations in a more systematic way. I'm about to close this session here. We may see a number of questions here, but I just want to summarize first what I tried to transport here, and that's essentially again like these 7 principles. So judge fast if there is any possibility to save the company. Make sure you're not burning money or as few money as possible. Sometimes it's not possible to turn a company break even. And it makes sense to spend a bit, but like think about it may need 18 to 24 months until you've turned your company around on a business model. Overcome blind spots by sticking to a proper process and also by increasing the diversity in your team. Strive to be data driven, even if it's like made up data like this perception data, how I showed you. That really helps in the processes, and that also avoids like power plays in board situations where somebody pulls in that direction, and opinion-driven decisions. That's the worst thing that you can do in such a situation. And then understand that if the company is going to change, typically it's also something is going to change in your role or in your personality. And start earlier. We've seen it, and the hard thing, you know, also personal experience. I mean, I was with all things, we were like 5 years running like the fools. It was really successful, but you already felt after these 5 years, whoa, I'm starting to be a little bit tired. And then you run into a pivot situation. So, I mean, and then if you, in that situation, you try to run another year, so it's getting worse and worse. So there's obviously then also like a burnout risk. So that's my summary here. I saw there is some question about the link. We'll correct that in a minute. But other than that, I mean, Stefan, what
Yes.
questions came up during that session?
Yeah. So for the follow-up email, you will get the link for the white paper. So yeah, we've seen it's download and printing is disabled, but don't worry about that. Questions are, for example, how do you align everyone in your team with your investors that a pivot is needed? Because there might be different opinions about that.
Yeah.
Do you have any tips and tricks here?
Yeah, it's a very good question, and I would really split that depending a little bit on the stakeholders. So I mean, typically you have like also some formalities to watch to. Essentially, what I oftentimes see is ultimately the board is responsible for the strategy. And I very often see that the board is not really like taking its responsibility, because they say, yeah, you management team, please propose. And yeah, if you think so, then do that. But I think it's extremely important to get the board aboard and to have these discussions first, also then in the board, on board level, to have an alignment there on what you're going to exploit, experiment, etc., etc. With regards to the team, I made good experience to be very open to the team about what happens. I mean, sometimes we fear that, yeah, you may run into a situation where you have to release people, but people work in a startup because they know it's a startup. The other ones don't come. And it's better to be open, of course, in a undisclosed environment to the team. With the customers, I would not announce anything as long as you're not sure in which direction you're going, because they essentially, I mean, are more irritated if you say, okay, we're not sure if the business model is going to go on. Then what will happen immediately is that they stop by, continue to buy, and that makes the situation worse.
So for everyone, if you have questions, just put them in the chat or in the Q&A section. There's one more around. Are there any advices you have for identifying founders who are aware that sometimes a pivot is needed, and sometimes founders are maybe based on their profile, I will not change, I'm so convinced about that. Do you have any tips and tricks for investors to identify?
Yeah, that's a really hard one. And I have to say, in my experience, it's I would say, I used to say 50%, but today I would say it's more between 60 and 70% of the founders that are addressable in view of something has to change. But the question is, who is saying that? And I know that from my experience. The VCs came back and said, Stefan, something is not working. So the first thing I thought is okay, my company, I know what interests you have. You're probably not the best to tell me that. Personally, I make the experience, and that's maybe one of the advantages I have. I can talk on founder to founder level. So having somebody who can talk at eye level, hey, I know how it is, if it feels like that, whether it's me or somebody else, I mean, that's also my job. What I do a lot, of course, is really coaching the founders through such a situation. But if you're a VC, I mean, that happened quite a number of times in the past. They just made this a small intro and said, hey, XYZ founder just met Stefan. Maybe you just want to talk quickly on what his experience in similar situations was. That's the best thing that you can do.
Great. Thank you very much. There were a couple of thank yous for your great presentation. And one question is how to best get in touch with you, Stefan.
That's good. I think I have a last. Oh no, I don't even have that. That's totally missing. A total fail on on my sales side. But if you look at www.pivotal.ag, that's where you can find me. Connect with me on LinkedIn. Reach out to me. I mean, my name is unique in the world. No, there's no second Stefan Zanetti. You'll find me. And you will get from Julia a follow-up email with a presentation, the link to the white paper, which will be corrected, and then drop out to me. Reach out to me, and I'm happy to, of course, dig into your cases.
Great. Thank you so much, Stefan. It's been super insightful. I learned a lot, and I hope everyone else here in the session as well. I think it's interesting to see how you can turn around businesses when you're recognizing it early on, take the people with you. I think a lot of more people need to learn about how to do that. And thanks a lot for taking the time. Thanks a lot for those insights. We'll do a follow-up email. And with that, I'd like to say thank you and see you for our next webinar.
Thank you too. Bye-bye, everybody.
Bye-bye.